looking at political position as an alternative investment window. Maybe we should start putting that in the box for those of you who are economists and analysts, whether political portfolio is a better weighting when it comes to return than buying stocks. So we're still talking about the playbook for equity. So if I have 55 million instead of picking up a political party form or whatever, where should I put it? In stocks, in managed funds, like mutual funds, or ETFs?
Well, I mean, it really, again, comes down to the same things, your risk profile, your time horizon, and so on. But in terms of the outlook for these assets, right, I already mentioned the fact that we don't expect much to change in equities in the near term. Before the year end, though, when there's more clarity over the particular candidates contesting and people are more confident to make a bet on who they think is going to win and how the economy will look after, then we should see a lot more market activity. In terms of the fixed income space, we expect yields to go up, so inflation is a big driver, but also the election effects, like we saw in 2014, like we tend to see in emerging markets, that should drive up yields. And then obviously also if you look at currencies or currency, you expect a bit more pressure on the naira based on inflation and based on the fact that a lot of people are going to be looking at dollars pre-election. So, you know, when you have gotten those outlooks on the different asset classes, then you look at your time horizon, you look at your risk appetite, and you decide, okay, where do I want to play?
Do you think the naira is, the time for that pressure on naira is getting close by? If you look at the steady inflows via the I&E window on a daily basis, do you think we are close to that level and that the bulwark of defense that the central bank had built around the naira over a year and counting, or 1.5 years, may begin to be impacted one way or the other, but not yet full-blown?
Well, I must admit I haven't looked at the I&E turnover numbers in a couple of weeks, but naturally what you expect is sort of more flights to dollars, partly, even if we didn't have elections, partly because of the trend of monetary policy abroad, right? So again, it's something that the CBN is aware of. We haven't had any extraordinary dollar income like in Eurobonds, for example, in recent times. So we're relying completely on oil earnings. Thankfully, oil prices are strong and production is healthy. So the CBN is in as good a position as it would hope to be. Obviously, even the walls of Jericho came down, so your defense is only as strong as it is until it comes crashing down. But we are not particularly fussed about the naira. We do think there's going to be more pressure, but we do think that the CBN has the ammunition it needs to defend the currency as long as it allows the I&E window trade and allows proper price determination, as we've been seeing in the last 18 months.
Yes, that's good. But from the broader macro economy, you're not seeing any major action till the end of the year, but 4 months in the 12th calendar year is quite a long period of time to manage the economy one way or the other. Are you enthused by anything you've seen at the moment from the economic managers in the cabinet and all that to say, look, something is being done, or do you think the offices are closed and everyone is on the political field of play?
Well, I mean, in terms of what I'm looking at or I'm looking forward to, the issues around the PIGB are interesting because I do think that it is better that we deal with that head on as opposed to keeping these bills sitting in the Senate for years. So even if it's a case of going back to rework it or, you know what, scrapping the entire process, but that clarity of knowing that, okay, at least we know that there is or there isn't incoming legislation is key. So it'll be interesting to see how that develops over the next month and if we see any sort of progress or any change on that before the elections. But beyond that, I do think that we're going to be moving a bit on autopilot and policymakers will largely be reacting to indicators and on the fiscal front, sort of, you know, keeping or putting their house in order for elections in 2019.
And finally, do you think will you still be able to find a bull case scenario for the equities market for 2018, or we're moving more in a bear case scenario at the moment, or perhaps maybe a best case scenario? What's your take?
I think right now the status quo expectation is for the market to close down. Like I said, we're 9% down, so I think even a low double digits decline would be reasonable. I think anything beyond that or anything near positive would be a surprise, mainly because between now and the end of the end of the year, we still have potential election fever hitting the market. Naturally, though, when you have one factor driving market activity like that, if that factor suddenly turns positive, then you can really see a strong positive effect, right? So we recall in 2017 how the market rallied on the I&E window, right? Because the weakness in the market had been premised on foreign exchange illiquidity, right? So similarly, if we see a sort of improvement in the political space or just a resolution to uncertainty, then the market could really actually look on the upward. Again, we're not particularly optimistic about that at all.
Okay. Michael, we need to let you get back to your office. There's one breaking news. Right now, South Africa's economy has entered a technical recession. That's what the second quarter GDP is flashing right now for us. I'm sure you want to be on that. That's the second largest economy in Africa. The second quarter GDP report is out, and South Africa has entered another recession. This time, technically, 0.7% negative. Okay, let's wrap it up for today. Michael Famuroti, the chief economist at Vertiva Capital Management, live from our studios at the Nigerian Stock Exchange.